Welcome to the Niche Pursuits Podcast. Are you ready to discover some niche business ideas that actually work? Well, it's time for a motivational kick to jumpstart your next big idea. Here's your host, Spencer Haas.
Hey everyone, welcome back to the Niche Pursuits Podcast. I'm Spencer Haas from nichepursuits.com, and this will be episode 29. Today I'm going to be discussing two different sites that I purchased earlier this year and how that's been going and what I've learned along the way. In addition, it's a little bit different because today I have Perrin with me on the show as a co-host, so welcome Perrin.
Thanks for having me.
Yep, absolutely. It's good to have you back. Everybody that's listened to previous podcasts will remember that you were on one of my podcasts where we discussed the second niche site project. And in addition, you were the student that did the niche site project, created a niche site from scratch that I documented basically all of a good portion of last year for about 6 months on nichepursuits.com.
Mm-hmm. Yep.
And also by way of information for those listening in on the podcast, I recently hired Perrin full-time that he is now going out and he's building niche sites for me. He's been doing that now for about 4.5 months or so, and it's going pretty well, I think.
Yeah, definitely.
Yep, it's been a lot of fun. So it's good to have you here as a co-host. We'll kind of dig into what we've learned along the way here. Sound good?
Sounds good.
Let's do it. So before I really jump into the numbers, because there is going to be a lot of numbers in this particular podcast, I just want to thank everybody for the feedback on the last podcast that I did, which was an explanation of how I've kind of changed my opinion about how frequent I should be doing podcasts and why I'm doing podcasts. I've really come to a deeper understanding of the value that my audience is getting out of these podcasts, in particular for those that don't go and read my blog posts. And so I got a nice couple of reviews on iTunes, so I want to thank everyone for that. But let's jump right into it. I recently did a blog post that gave a monthly overview of two sites that I purchased, gave the April income report for those particular sites. And to give you some background, I set a goal in January of this year for buying websites. I decided that I wanted to spend about $25,000 buying sites, with the idea being that as I buy these sites, I'm going to learn through the process, but hopefully I'm also going to increase the earnings and either just keep that as monthly revenue or eventually go and sell those sites down the road. And so the two sites that I bought, one of them I refer to as my AdSense niche site, because it's primarily monetized by Google AdSense. And when I bought it, the previous owner had documented that the site was earning about $400 a month. And this particular site is based on an electronics product, something that you could find on Amazon. But that's about all I'm going to reveal for the specific site itself. I'm not going to reveal the URL or anything like that. And so I bought the site for $5,000, which is a decent multiple based on that $400 per month revenue. But as I'll show here in a minute, that may have been some misinformation or some bad research on my part. The second site that I purchased, I'm calling my Pinterest site because the traffic is primarily generated through Pinterest. And I bought that site also in January for about $2,100, and it was earning approximately $250 per month. And this site is based on the crafting niche, is the best way to describe it, if you will. So my goal, again, for these sites was pretty simple. Do whatever I can to go in and increase the earnings and then either resell them for a profit or just hold on to them and enjoy the additional revenue from the sites. So anything you want to add there, Perrin, before I jump into the numbers themselves, the earnings from April?
No, I don't think so. I think all the detailed stuff we're going to cover here in a few minutes, so let's do it.
Yeah, let's jump right into it. So I haven't been doing monthly income reports from month to month, January, February, March, at least that I've shared publicly on the blog. So this is really the first official one. And so I'm going to compare how the sites did in April to how they did in March, just to give people a reference point there. But essentially, the strategy for the AdSense niche site. It only had about 5 articles on it when I bought the site, and it was getting 200 visitors a day. And so what I wanted to do is build links to the existing pages to hopefully increase those rankings in Google, and then also to create new content based on other keywords that we had researched and found and felt would be valuable, and add some meat to the site, and to get traffic from long tail keywords. And so the strategy has actually worked out okay. It hasn't been stellar, but it has been sufficient. We've at least seen a little bit of positive increase in the traffic. So it's gone from about 200 visitors a day on average to now about 230 visitors a day, which is not a huge increase, but it is something. Unfortunately, that hasn't really translated directly into an earnings increase. And so in March, the site earned $301.09. And that was $262.13 from AdSense and $38.96 from Amazon. And what is also interesting, as far as some background, when I bought the site, I may have bought it when it was at a peak, a seasonal high of traffic and earnings. Because during the months of November and December, which of course we know is holiday season when a lot of people are buying things, the site actually was getting closer to $400 a month in earnings, and then almost immediately, the next month, January, February, it was back down to about $300 a month. So I bought it with the assumption that it was averaging around $400 a month each and every month, and so that was a lesson learned. I don't know why I didn't think of that. I mean, I know very well that there's the seasonal buying during November and December, and I guess I just let my imagination get carried away. I saw the increase in traffic. I thought, oh, it's just ramping up and it's going to continue, but it was probably just a seasonal increase.
So maybe that's kind of a good thing to go over, is giving kind of an overview of what you were thinking when you first saw the site and what sort of pushed you over the edge into making that purchase.
Yeah, so definitely I did see some of that increase in traffic. I thought I was seeing a trend because it increased from October to November to December. And I just assumed, that January was going to continue this trend. So that's one thing I was looking at, was a nice trend. But also what I looked at, there was only 5 pages of content. Yeah. Very, very little. And I thought, well, to increase traffic, I can just put more content on the site, and surely that's going to draw in more long-tail keywords. And then finally, a lot of the rankings for the site were somewhere around middle of first page to even second page for the particular keywords they were ranking for. Yep. And so I figured, well, if I just build some links to those pages, they're going to jump up to the top of the first page, and that will just increase the traffic as well. It hasn't worked out quite like that. We have increased the rankings of some, but it hasn't been as drastic as I had hoped, or as quick as I had hoped.
Yeah, and it's also in a buyer's niche, or so we thought. And it's sort of a hobby market, and we've had some good experience in other hobby markets like shaving, where it has a kind of a fanatical consumer base that doesn't mind or finds it fun to spend money in that area. At least that's one of the things that I liked about it when I saw it.
Yep, definitely. And so that is one of the things that we saw was, well, it's only earning, $38. It earned $38 in March in Amazon earnings. We figured, well, these people are, rabid fans of this. They're going to be buying related products. And so we wanted to increase the Amazon earnings, and that's what we did in April, is we created a shopping comparison chart that put together some of the top products in this particular niche, and we put it on the home page, the highest traffic page of the site, pretty prominently. And so we wanted to really increase the Amazon earnings to hopefully increase it to more than $300 a month in earnings. And well, at the end of the month, Amazon earnings did indeed increase. They almost doubled for the month, so that's really good. They went from about $38 to $62 in April. However, there was a bigger decrease in the AdSense earnings because of that. And so we found, based on what we looked at, the stats and everything, that because more people were clicking on Amazon links, less people were clicking on AdSense links, and so that there was just that direct correlation with a decrease in AdSense earnings, even though there was a doubling in Amazon earnings.
Yeah, and I think that was interesting for me because you and I have both seen sites from Niche Pursuits readers or even from people who are offering to sell us their sites that a lot of people are doing really well with both, but I think it goes to show that it's something that you just have to experiment with, Some sites can do really well with both Amazon and AdSense, but with this particular site, as soon as we added some more aggressive Amazon tables and charts and affiliate links, the AdSense pretty much dropped immediately.
Yep, definitely. And so to give the number, the overall earnings for the site in April was $238.05. So that was a decrease overall of $63.04. So the AdSense earnings went from $262 in March to just $175 in April. So that's not what we like to see, but it was an experiment that we tried and we learned from that. We now know that the value of each click to Google AdSense is worth about 2 times as much as each click that we were getting to Amazon. And so for this month, for May and going forward, we are making that comparison chart much less prominent. We're making the ads a little bit more prominent. We're testing out different AdSense placement, and that's sort of the strategy going forward as far as monetization, just testing out different ad placement to see what we can do to overall increase the earnings. And for the record, from the date of purchase until the end of April, this particular site has earned a total of $891.68.
So what's that bring the cost up for you, just in terms of what it's earned and the dollar amount you paid for it?
Right, so I spent $5,000 on this particular site, so I'm still in the hole, $4,100 for this. But the good news is that I still have a site that's earning, and I still have an asset there. So even if today I decided to turn around and just sell the site, it's earning $250 a month. On the high end, EmpireFlippers.com, they list all of their sites for 20 times monthly earnings. And so if I listed the site there, that would be about $5,000. So, I could sell it today for $5,000, get my initial investment back, and still have made, $1,000 profit on top of that.
That's something that you and I were talking a little bit about yesterday, because that was a misconception that I had. Just because we were doing a bunch of stuff, and the way I normally think about niche sites is, increasing traffic and increasing earnings and, just pushing and pushing and pushing. But the risk and the pressure is a lot lower with a site that you've bought and is already earning, because even if you do nothing and it holds steady, then you're making money because you are recouping the cost that you paid for it, and then you can sell it for whatever down the road, which is something that I hadn't thought about. And it's kind of useful for anybody who is going out and buying sites that, you can do relatively little work and make some good return on your time.
Yeah, absolutely. And that is a good point to make, because that is something that certainly I thought about. And so I know that even though these sites might be decreasing a little bit, if I can just get them even back to their original, $400 a month for this particular site, that's still going to be a great return for me because we really haven't put a ton of time and effort into this site yet. We've outsourced some articles, we created that comparison chart, and we built some links. So we have put time, but that's over a period of 4 months. So really only a couple of hours each month is the time commitment that we've put into this. And if I can recoup my original investment after a nice 8-9 months earnings, there'll at least be a little bit something there. Now, of course, any niche site, there's risk involved, and so it's not quite like investing in a bond, for example, which basically is the same thing. They have a coupon payment every month, that you get that interest each month off of your investments, and then you can still sell the underlying bond. Bonds are a lot lower risk. Niche sites, they could go to zero. That's always the risk. But the upside is that, well, hey, I could buckle down and build this into a much, much bigger empire as well.
Mm-hmm. And it's an interesting business model. You could feasibly buy a site, let it sit there, and then sell it in, 8 months, 9 months, 10 months, whatever your multiple was, and then make a little chunk of change,
Yep.
So for this one, what do you think about going forward? Is there still room for us to do other stuff? I mean, like maybe add 20, 30, 40 pages of content, or what at this point feels smart to you with this particular type of site?
Yeah, good question. I think the first thing that we maybe need to do is buckle down and try to increase the rankings even more of some of the existing pages. I think that's going to be the lowest cost to hopefully get the biggest benefit. We have done some link building, but still most of the keywords are still middle of the first page.
Right.
And so I'm thinking maybe that's, in addition to me just adjusting ad placement and things like that, to maybe just try to improve the existing rankings. And then the other one would be to just increase the amount of content that we're doing on the site.
Yeah, and I think that makes sense, because so far, or it makes sense as a general process when you're trying out a new site, or when you're buying a site rather, is to try the stuff that doesn't cost you resources. Just fiddling with ad placement, different types of monetization and things like that before you really go crazy with throwing resources at it to try to push it super hard,
Yep, absolutely. Let's go ahead and jump into the second site now, the Pinterest niche site. So this second site that I purchased gets almost all of its traffic from Pinterest. And I've actually tried a number of things previously to improve the earnings. When I first bought the site, it had a lot of problems. First and foremost, and I knew all of this going in before I bought the site, it was not approved on Google AdSense. The previous owner had used a lot of copied content, and through communication with Google AdSense, they actually told me, because I asked Google AdSense, I just bought this site, how can I get it reapproved? Because the previous owner has told me that it's been banned from using Google AdSense. And they responded and said the reason is because of all the copied content on the site. The previous owner had curated, and I use that word fairly loosely because most of it was copied with some minor almost spinning of a few sentences here and there.
Yep.
The content was placed on the site, and Google AdSense doesn't like that. If there's no original content, they don't approve you to Google AdSense. And so my option was, okay, well, I can get rid of all the copied content and start from scratch and build original content, but that really wasn't an option because there's about 1,500 articles currently on the site that's driving 3,000 visitors per day to the site. So I didn't want to just give up 3,000 visitors a day just so that I could have Google AdSense. I know the site could immediately start earning more if Google AdSense was on the site, but it just didn't make sense to get rid of 3,000 visitors a day.
Yeah.
And so the second thing that I tried was getting traffic from Facebook. I did a short experiment for about a week where I tried to just post original content on Facebook, because the site had an existing Facebook page of about 3,000 Facebook fans. And so a couple of times a day for a week, I posted original content, and the strategy actually worked fairly well. On average, the site started getting about, I believe it was 48 visitors a day from Facebook, which is pretty good when you think about it, going from almost nothing to about 48 to 50 visitors a day from Facebook. But when I looked overall at the traffic, 3,000 visitors a day from Pinterest versus 50 visitors a day from Facebook, and I wasn't having to really do any work to get that Pinterest traffic. It just didn't seem worth it to me.
Yeah, plus, like, we already knew, and I don't know if we've disclosed the income yet, but we already knew that we had massive traffic and, at least per visitor, a fairly low dollar amount than what we're used to seeing. So we kind of knew also that 48 visitors a day wasn't going to make a huge difference for the work that we were putting in.
Yep, no, that's a great point for sure, because these are people that, when they're coming from Pinterest or Facebook, they're mostly interested in the pictures, and they're coming and they're just looking at the pictures and they leave relatively quickly. Yeah. And so it's hard to capture earnings from them, to get them to click ads or do anything else, because they're on and off fairly quickly. And so in March, let me back up and say, when I bought the site, it was earning between $200 to $250 a month. And then in March, I actually did fairly well. It increased to $301.09, which is a nice percentage increase. And the earnings is coming from 3 different places. Media.net ads was $267.25. Contera ads, $13.76. Infolinks, $27.39. Unfortunately, in April, the site had some technical issues. I installed a plugin that caused some issues, or there's a conflict between multiple plugins, and it actually took me a little while to figure out what was going on. So for about a week or two, the site was loading really slow, and so not as many people were actually viewing the pages and viewing the ads and staying on the site because they were leaving before it loaded. And so once I got that issue figured out, which I did, thankfully, I just deactivated one of the plugins and there was no longer a conflict. Everything is up and running fine now, but the site got about 10% less traffic during the month of April due to that. And on average, like I said, I'm getting around 3,000 visitors a day. I guess maybe not on average. It bounces somewhere between 2,300 visitors a day to 3,000 visitors a day. So the average is maybe closer to 2,500 or something like that. Mm-hmm. But the good news, even though there was all those technical issues, everything's up and running now, and hopefully May will have a little bit better month. But for April, because of the down traffic and just variability reasons, the site was down to $245.85 in earnings. And the breakout of that earnings was $171 from media.net. So that was a pretty significant drop there. And Contera was $14.94. Infolinks, $59.23. Actually, about a double in earnings on Infolinks. So I've decided to get rid of Contera ads, just focus on media.net and Infolinks, and to try and increase both of those a little bit more. So overall, the site was down $55.24. I do find it kind of funny that we're recording a podcast and we have nothing but bad news. Both of the sites were down for the month of April, but that's realistic. When you buy a site, not every single month is going to be a hockey stick month where everything's going up and up and up. This month was a little bit of a down month.
I also think it's a really important lesson, especially for someone like me who's obviously never bought a site before, which is that I mean, especially with the Pinterest site, we've done just extreme amounts of experimentation. We've tried basically everything, and we can get into that in a few minutes here maybe, but we've tried so much stuff, and when you're doing that to any site, you're disrupting what's already there, and you can't really expect to hockey stick when you're doing that much experimentation. I mean, you could, and you might get lucky, or you might see that something is increasing a little bit and then push it further. But when you're doing that much experimentation, which is kind of necessary when you are, going into something and trying to increase the earnings, you know, going down in earnings a little bit is just one of the possibilities.
Yeah, absolutely. And that's a good point. We should review what we've done to this particular site. One thing that I didn't mention is we also wanted to see if we could get any traffic from Google, because it wasn't getting any basically. And so we did go ahead and do some keyword research and picked one keyword that we thought was low competition that we could rank for. We wrote a nice article on it and did everything that you're supposed to and put it up, and decided to just use mostly internal linking to see if that would show up in Google, because again, the site has 1,500 pages. It's a page rank 4. It's got some nice authority to it. And so we thought if we just put it on the home page and do some internal linking, surely Google will at least index that and rank it somewhere.
Yeah.
Well, the page did get indexed, but it's not really ranking anywhere. Google, I believe, isn't extremely fond of this site just because of all the copied content.
Yeah.
And so that is one thing that we've tried. We're now trying an email opt-in form. We're gathering emails. We've got about 125 people on the list right now. And during May, I'm going to, actually I should just say yesterday, I just sent out the first broadcast email with an affiliate offer in that email to hopefully see if we can monetize that list. And so I may try that a couple of times throughout the month of May to see if I can generate some sales there.
And I'm really hopeful for that too, because you and I had both been reading a bunch about email lists and monetizing lists, and we know, for example, the guys who own Lulora, and we have been reading a lot from Ryan Dice and stuff, and a lot of people are hitting sort of this benchmark of about $1 earned per month for every subscriber that they have. And with this site, if we can do that with 100 or 200 visitors, that's basically a 100% increase in the earnings. So I'm hopeful for it. We'll see how it goes.
Yeah, I agree. It's a small list at this point. 125 people isn't a very big email list, but it is something that we can start testing with, and any earnings at all would give us some indication that there's possibility there. So that's what we're going to be trying out for this month. There was one other thing that we had tested. We also tried out doing some Amazon ads. Again, we did a small comparison chart on the home page. The results for that was kind of weird, wasn't it?
Yeah.
I believe because of the technical issues on the site, the Amazon clicks weren't registering on Amazon. It was really weird. We're getting almost 3,000 people a day. We've got a very prominent comparison chart, and certainly some people were clicking, but Amazon Associates was registering 0 people.
Yep.
So not quite sure what was going on there, so we kind of scrapped that at the moment. We may come back. We'll see if we can figure out those technical issues.
Yeah.
But overall, that's what we've done. That's the plans going forward. And just for the record, the site has earned a total of $766.13 since I bought it through the end of April. And so I bought the site for $2,100. And so I'm going to do some quick math here. That means that I'm still in the hole, $1,333.87. But again, because the site is earning about $250 a month, I could sell it at the high end for $5,000. So this site, I'm actually in much better shape because I bought it for so much less. A relatively low investment. Today I could turn around and sell it and make a profit. So I'm feeling okay. And even if it doesn't increase much more than the $250 to $300, hey, it's still been a great learning experience. And to be honest, that's what the primary purpose of these two sites has been. I wanted to buy relatively smaller sites and try my hand at just purchasing them, coming in, revamping, increasing them, seeing what I can do, getting my feet wet with the entire process, and then maybe down the road buy a bigger site that's earning, 1,000, 2,000 or more, invest a little bit more money when I'm more comfortable.
Yeah, because a lot of people in this space are having really crazy success. I mean, we've talked to some people who are buying sites that are earning, or buying sites for $100,000 and doing, magic and voodoo or whatever, and then selling them for almost double that, And so there are really big fish out there, if you're good at it, but it seems to be, more difficult than I think either of us really expected.
Yeah, it is difficult, and the Pinterest site in particular is way out of my realm of expertise.
Yeah.
My expertise is generating traffic from Google, and that's one of the reasons I wanted to dive into this, is because it was so different. And so I'm learning a lot and finding that it is hard to switch the traffic source. It's getting tons from Pinterest. It's hard to start getting a ton from Google in this particular case. The other site is a little more within my realm of expertise, but because maybe I bought it at a peak of traffic and earnings, it's difficult to get it back to that original earnings, at least at this point.
Yeah.
But a lot that we're learning. It's been good. It's been some good experiences. And so hopefully this podcast gives people just some realistic outlook if they're going into buying their own site. There's a lot to learn, and we've made some mistakes. We've done some things right. And as we go, hopefully we'll be learning a little bit more so we get better on future projects as well.
Yeah, so what would you say were, the most important things that you've learned in the process of buying these two sites?
Couple of the things is just do your due diligence as much as possible. I maybe paid a little bit too much for one of the sites, or at least I bought it based on information that I thought was solid. And this isn't the seller's fault. I should have realized that maybe there was some seasonality to this particular niche, but I didn't do that research well enough. And then the second thing is just that it can be difficult to change the monetization strategy and the source of traffic for sites overall. It's hard to turn them around, in particular the Pinterest site. Trying to move over to Google and getting traffic that way is just turned into a monumental task that I don't think is going to happen at all. So I don't know, anything else that you've learned outside of what we've mentioned already?
Yeah, totally. And, you and I were talking about this a little bit yesterday, but I think one of the things that I learned was that it's important to sort of go beyond the data and take a really solid look at the market just based on your own judgment. Because in this case, I think we misjudged both markets a little bit. So for the AdSense site, I think we assumed that these people were much more buyers than they really are. And that was probably because we sort of didn't factor in the Christmas earnings and stuff, but also because we may have assumed that all hobby niches were the same and, those types of buyers were the same, when in reality, they're not all the same. And so instead of, buying a bunch of different hobby products, these folks like to buy smaller accessories, which didn't translate into huge earnings that we kind of hoped for.
Right. Yeah.
And then with the Pinterest site, I think, the data looked so big and shiny and just really promising. 3,000 visitors a day seems ridiculous. And it's very easy to think like, man, all we have to do is convert X%, and we earn X dollars, and then your imagination just starts running away with itself. But Pinterest and social traffic is just very different than somebody going into Google and typing in a search term and, looking for something really specific. These are browsers, and, they're spending a lot less time on page. They're just looking at pictures and then exiting and that sort of thing. So I think as we move into the next ones, I'm going to be taking or putting more stock into just a subjective look at the market itself.
Yep, great points. I agree. And part of it is just the risk involved with buying sites. I mean, when you buy it, you have some strategies that you want to implement, but you can't try those until you own the site. And so even though we had some great ideas, and they probably would work very well on other sites, like one simple thing on the Pinterest site, a risk that I took was assuming or hoping that I could get approved for Google AdSense. That was one big risk that I took, because if I had been able to get approved almost overnight, I don't know if the earnings would double, but it would increase significantly, just because Google AdSense pays so much more than these other networks. And so that was just a risk I took, a gamble. I rolled the dice, and it didn't work out in that particular case. But as you can see, the site's still earning what it was. It's still a good investment. I'm not losing money. I should be able to sell it for a profit down the road as well.
Yeah, totally.
That kind of wraps up that portion of the podcast. I did want to cover a couple of other things. Last podcast, I mentioned that I was going to discuss a documentary that I had watched, and I actually forgot to do that at the end of the show last time. So I'll do that now. The documentary that I watched just a couple of weeks ago is called Make Believe. It's a documentary about young aspiring magicians. And so it takes teenagers that have been doing magic for a few years or are very interested in magic, and they go to this big competition in Las Vegas, and the judges award, one particular person as the new sort of bright and shining magician, the next generation magician. And so it's a really big deal to these young teenage magicians. There's this huge underground, magic following, if you will, that most of us, like me, I have no idea how passionate some of these kids are, or some adults are. They do magic and study magic and come up with their own tricks all day long. And so the characters in the documentary are, they're quirky and they're interesting and they're different, but very, very interesting. And so I recommend it. It's kind of a fun documentary, a little bit different. So that's what I watched. I don't know if people are going to be interested in hearing about my documentary, so give me some feedback if you're out there listening. If you could care less about what Spencer watches for documentaries, let me know. But, if you want me to continue making the documentaries and book recommendations, please let me know that as well. So I am going to give another book recommendation. I actually did get some positive feedback. People said they liked that. Last week I shared that I was reading the book called Startup Communities, Building an Entrepreneurial Ecosystem in Your City by Brad Feld. And I did finish that book this week. And overall, I do recommend it. It is very good. It overall just covers how to start and ignite a vibrant startup community within your particular city. Now, where I live, I'm in Washington State in the Tri-Cities area. It's a smaller community, and there really isn't a vibrant startup community. So there's some great ideas in this book that I can take and start to get a little bit more involved and hopefully see some more action happening here. Now, Perrin lives in Chicago, so there's probably a little bit stronger of a startup community there, I assume.
Yeah, it's really strong right now. Mm-hmm.
Yeah. My only criticism of the book is just that Brad didn't write a lot of it. He actually, almost half of the book was him saying, okay, here's Techstars, And now I'm going to turn over the next 2 pages to so-and-so to describe how Techstars got started up. And now I'm going to turn it over to so-and-so about how we did Startup Weekend. And so a lot of it felt like it was Brad Feld, writing a paragraph and then introducing somebody else to explain how they did something. Not a bad thing, but just I got to have a criticism for every book I read. You can't just say everything's awesome. So that's my only thing. I want to hear more from Brad. I want to hear the whole book. Yeah. So that's the only thing. Great book, though. The other book I read is called, or not that I read, but that I just started this week. It's called The System: The Glory and Scandal of Big-Time College Football. It's by Jeff Benedict and Armin Katayan. And I'm only a couple of chapters in, but I think I'm going to like it a lot. It's a little outside of the normal business book reading, but so far I'm captivated. The storytelling is really good in this book. It kind of takes you behind the scenes of a couple of experiences of college football players and discusses the potentially shady recruiting practices and other scandals of college football. And so I'm interested to see what the book covers, and I can't recommend it right now because I'm only a couple of chapters in, but that's what I'm reading. I'll tell you more about it next week. Overall, that's about it. I don't have anything else to cover. Perrin, you got anything else you want to say?
I do not.
Awesome. So everybody out there listening, good luck starting up your own ventures. If you're not doing anything right now, just start something. You can learn so much by just going out there, starting a website, or trying your hand at whatever venture that you're interested in. You don't need to spend a lot of money. Just go out, learn by mistake. That's the best way to get your feet wet and actually get a business going. So that's my recommendation for the day. I appreciate everybody listening in. Thanks a lot.